On Business Incorporated today, African finance chiefs, including Nigeria, praise IMF leader, call for fairness in the ease of doing business report controversy. South African Metal Workers Union start indefinite strike. Auto industry fears impact. Rwanda and Qatar Airways seal milestone code-share agreement. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We kick off this midweek edition with intraday market numbers from Africa, where investor sentiments were mostly in positive territory, except for the market in South Africa. Nigeria's main index was still strong at intraday. It was up by 0.36%, while South Africa's JSE index stumbled by 1.61%. Egypt's EGX30 rose 0.18%, while Kenya closed Tuesday's session negative by more than 1%. In the meantime, investors traded with mixed sentiments in the Middle East. In the UAE, the Abu Dhabi and Dubai's indices both posted losses at intraday, down by 0.12% and 0.94% each. On the flip side, Saudi Arabia's index was up 0.25%, while the Qatari index recorded a 0.74% gain at intraday. All right, we'll move over now to the UK, where gas prices have surged to new all-time highs today, piling more pressure on energy users and providers. For these and other developments in the UK, Juliana will tell us more. Good afternoon, Juliana. Well, British wholesale gas for day-ahead delivery breached the £3 per therm mark for the first time on Wednesday morning, jumping by 25%. This is not looking good for businesses and households. Is the Prime Minister also addressing this in his speech today?
Good afternoon, Chimeze. No, it's not great at all. And alas, no, the British Prime Minister Boris Johnson didn't address the issues that Britain is currently facing in his pretty well-watched, bustling speech at the annual Conservative Party conference. It's been going on for 4 days. It's finished this afternoon. And he spoke in the way, many who know him would expect him to speak. Unfortunately, for Boris Johnson's critics, nobody arouses optimism just like him, and there was lots of punch, but no mention of the rising energy prices, no mention of the crippling fuel crisis, and no mention of low wages and the fact that the universal credit uplift is ending today. There was one SNP, the Scottish National Party member, who wrote on Twitter, bluster, buffoonery, beavers and burgers, a very British way of pronouncing a shoddy speech, but that's how it's been described. Boris Johnson is hoping that he can transform the British economy into an economy of high wages, high intensity, high education, but no, there was no mention at all of the current crisis that Britain is in, which is a huge concern because, of course, we've been discussing it over the past couple of weeks. Anybody can see it on social media. There are supply shortages. There are issues with energy prices, so much so that this could actually affect Christmas and not having a turkey on the table. But the Conservative Party annual conference is done. Prime Minister's questions will return next week. And of course, the Prime Minister is going to have to once and for all answer to, the issues that Britain is facing today.
I guess we'll wait until then. Anyway, France has intensified pressure on the UK over post-Brexit fishing rights, warning bilateral cooperation could be at risk. Bring us up to speed with this development. What is the UK's response on this?
Yeah, this is a long-running story about access to British waters. This is one of the reasons why it took so long for there to be a final agreement on the arrangements post-Brexit, because the European Union were not happy that Britain was deciding to shut off its waters. There has been an agreement in place, but according to French ministers and French fishermen, it unfairly treats French fishermen, particularly as it pertains to the Crown dependency of Jersey. This was an area that a couple of months ago there were huge standoffs between British boats and French boats. You'll all remember those images, and it sparked again. Now, French fishermen are saying that a lot of the paperwork that they have to sign to register their boats has a lot of slip-ups and loose ends. They feel that the documents are not being handled properly by British ministers. According to them, only 31 of a possible 70 vessels have been given access to Britain's fishing waters, even though they meet the criteria. So they do believe that they're not being dealt with properly. Now, Jersey receives 95% of its electricity from France. It is much closer to France than it is to Britain by 3 underwater cables. And the French government has said that, they will cut off that supply if they're not treated fairly. They've also said that they would be blocking some exports into Britain. We have had a response from the British government. Lord David Frost, he's the Brexit minister. He says that Britain has granted 98% of the licence applications from the EU boats to fish in British waters, according to different criteria in the Trade and Cooperation Agreement. And he says we do not accept that we are not abiding by the rules. He says we've been extremely generous, and the French, focusing on a small category of boats and claiming we have behaved unreasonably, is not a fair reflection of the effort. So, yes, long-standing tensions between Britain and France over access to British fishing waters, but the threats from the French government remain.
Well, it's the midweek trading, how the market's trading this intraday, and what are the major drivers?
Yeah, not great at intraday. In fact, the FTSE is down below 7,000 points. If it remains this way, this will be the lowest performance it's had since about mid-July. The all-share is down 1.74%. The FTSE 100 is down by 1.71%. And the FTSE 250, that's down by a whopping 2.12%. In the currencies market, the British pound is also down on the US dollar by 0.47%, though up on the euro by 0.04%, and down on the Japanese yen by 0.50%, Shimi.
Thanks, Juliana. We do appreciate that. Enjoy the rest of the day.
Thank you.
And in Europe, stocks were sharply lower in early trade as U.S. Treasury yields spiked, with inflation concerns continuing to weigh on global markets. For more from the European space, let's bring in Chelsea now. Hello, Chelsea. Good afternoon. Well, a top EU energy official said that Europe has enough natural gas to get through the winter as concerns grow over a looming shortage. Are traders buying this?
Well, I think a lot of investors actually aren't buying this attempt to calm markets by European officials. We've seen just today at one point European natural gas prices shoot up about 40%. They were up 20% yesterday. So these are really phenomenal increases in prices. And a lot of traders are looking at the situation where European gas stockpiles are at about 75% right now heading into the winter. This is the lowest level in 10 years. And saying that if things change, if we see a very cold winter, if we see a very cold autumn, then we could shortly be running down on supplies here. So European officials are trying to calm households' nerves, businesses' nerves, but the proposals they have so far don't seem to be working. We have seen a lot of European governments come out and say that they will try to contain prices either through subsidies for households and businesses or through things like tax breaks or freezing prices prices altogether. But European officials also are looking for, a more European-wide solution, something like having a natural gas reserve where the EU would pull together and buy for the entire bloc. That could help the bloc insulate itself from price spikes like this, but that's far in the future.
Now, we're already seeing companies and industry groups start to raise the alarm about prices which have soared 500% this year. Tell us more about how companies are dealing with these prices.
So a lot of companies are really struggling with this right now. It's really a breaking point for a lot of industries that rely particularly on natural gas. We've already seen here in Europe several ammonia producers, and that's a process that relies directly on natural gas. They say they're starting to cut back production because it doesn't make sense for them to keep producing when prices have gone up 500% this year, and they can't pass that on to consumers. So we're looking at the prospect of more production cuts, and ammonia is a bit of an overlooked market, but it's crucial for making fertilizers, so it's directly linked to our food supply. It also is a very important component for things like pharmaceuticals. We've also heard from other industrial groups here in Germany, like BASF, which is one of the largest chemical companies in the world, that they're preparing for the potential of power cuts in the months ahead. So they're talking to their suppliers, they're talking to the government, making sure that they will have enough power if we do see a situation where there is rationing. But just the fact that they're having these conversations publicly is really a testament to how dire the situation is becoming here.
In the meantime, data showed German manufacturing orders fell more than expected in August amid supply shortages. What kind of impact will this have on the broader economic recovery?
It's definitely going to dent the German economy. We saw from this report that manufacturing orders were down about 8% in August, and this was much steeper than any economists had really been looking for. In particular, we saw really steep declines in orders for the auto industry, and of course, that's a sector that's getting hit really hard by the shortage of semiconductors. They're having to cut back production, and industrial orders it's a very forward-looking piece of data, so it shows how the industrial sector is likely to play out in the months ahead. So this is a very worrying sign, and we're already starting to see a lot of economists and a lot of economic think tanks cut back their forecasts for the German economy. So one of the biggest think tanks here in Germany, DIW, has reduced their forecast. They're only looking for growth of about 1% to 2% this year. So this does mean that the German economy, its recovery is coming to an end, and it's likely to stagnate throughout the rest of the year before maybe starting to bounce back next year when some of these supply chain shortages end.
Thanks, Chelsea. We'll do this again tomorrow. Enjoy the rest of the day. And in Asia, shares were mostly lower on Wednesday, with major indices in Japan and South Korea leading losses regionally. Japan's Nikkei 225 shared earlier gains, falling 1.05% to close at 27,528 points, while the Topix index dipped 0.3%. South Korea's Kospi slipped 1.82%. Hong Kong's Hang Seng index declined 0.6% as of its final hour of trading. Shares in Australia also dipped, with S&P ASX 200 falling 0.58%. Overall, MSCI's broadest index of Asia-Pacific shares outside Japan slipped 0.7%. Mainland Chinese markets remained closed on Wednesday for the holidays. And stock futures fell in early morning trade after the markets rebounded from a tech-led sell-off a day earlier. Futures on the Dow Jones Industrial Average fell 222 points. S&P 500 futures and Nasdaq 100 futures both also traded in negative territory. The market saw a broad rally during Tuesday's regular session, with 9 out of 11 S&P 500 sectors closing positive. The Dow gained 312 points, the S&P 500 rose 1.05%, and the Nasdaq Composite rallied 1.25%. Denim retailer Levi Strauss and alcoholic beverage corporation Constellation Brands are set to report quarterly earnings on Wednesday. The ADB private payrolls report for September is set to be released today. Also on the labor market front, the closely watched non-farm payrolls report for September is slated for release on Friday. After the break, Africa Finance Ministers back IMF's Managing Director Kristalina Georgieva's leadership. This and more in a moment. To stay with us. Although regional economies have been hard hit, Kenya and other countries have seen the benefits of accommodative monetary policies as part of the emergency response by policymakers and central banks. Kenya's Equity Bank has climbed 3 places in the survey of Africa's top 100 banks in 2021 to number 24 and increased Tier 1 capital by 27% to $1.4 billion to take the top place in the East African ranking from Ethiopia's state-run Commercial Bank of Ethiopia. What is driving the banking sector in East Africa, and what are the banks in Kenya doing differently? I'm being joined by the CEO at Core Street Research and Analytics in Kenya, George Bodo. Thank you very much, Mr. Bodo, for joining us on the program. Good afternoon.
Good afternoon.
So when we look at the East Africa's top banks in 2021 survey, we see Kenyan banks featuring prominently. Can you give us a sense of how the banking sector in Kenya has been able to swim through the pandemic?
Well, I think that just like most of the banking sector in the region, the pandemic has really hit hard on some of them, actually all of them. And just to answer your question, that Equity Bank has replaced the Commercial Bank of Ethiopia in terms of ranking. And this is largely driven by the acquisition that the bank did in the DRC. Last year, the bank acquired SADC, which was the third largest bank in the DRC. And that moved up its asset base to, for the first time, its asset base crossed $10 billion mark. And that's primarily what drove the replacement. So it's primarily the acquisition that they did in DRC.
Yeah, when we talk about fintech, we think about Kenya, of course. So what business model stands Equity Bank out?
So Equity Bank primarily has been an SME and consumer bank, and they've achieved this through two strategies. One is using third-party platforms. They actually the first bank that pioneered the third-party platform. It includes agents all over. You don't have to go to the branch. You can withdraw money from the agent. Yes. And the agent can be a merchant, can be a shopkeeper, and that's how they've achieved that. And the second thing, of course, they've invested heavily in fintech. And in fact, they have now a whole division that is a fintech division that does, they're calling it technology as a service, that even not just gives equipment, the services, but also they're trying to acquire services else from other banks. So those two things is driven, we've seen that driving Equity Bank's growth model. Because with 10 million customers, you obviously have to think of how you can serve them away from the brick and mortar. So you have to create new channels, have almost over 10 million customers.
Now, how would you assess the central bank's monetary policy stance and perhaps how that has impacted the banking sector generally?
So the monetary policy today, and how it has responded throughout since the pandemic began. It's two ways. One is that in March last year, the central bank cut the reserve requirement for commercial banks, and that really released some liquidity of about $350 million to the banks. Although $350 million for me, in terms of liquidity, for me that was more. And the second way that the monetary policy has supported the economy is that monetary policy has printed money for the government, by the way. Today, if I look at, for instance, the central bank assets, the share of assets due from the central government that is owed to Central Bank of Kenya today is 15%. 6 years ago, it was about 5%. It shows you the amount of support that the central bank has to give to the national treasury in terms of plugging the revenue shortfall. So we've seen a lot of we've seen the central bank coming in strongly to help the government to plug in revenue shortfall. And this is something we've seen in a number of African countries, especially since last year. We've seen it in Ghana, we've seen it in South Africa. Nigeria didn't come out quite clearly on this, but we know that they've been doing it. So that central bank support to help plug short revenue shortfall, we've also seen it against in that one. And we're likely to see it this year because the revenue performance has been underwhelming. So essentially for me, monetary policy has been, to sum it up, it has been held hostage in a way due to fiscal dominance.
Now, as the world continues to find ways to get out of the pandemic, what is your outlook for Kenya's banking industry?
I think Kenyan banks, they're in a tight spot, very, very, very tight spot, if you ask me. The latest statistics that were released by the Central Bank of Kenya showed that the amount of loans that were restructured were equivalent to about 57% of the loan book. That is quite high. And on top of that, the official NPL gross NPL ratio was 14%. So you have a 14%, you have a 57% that is restructured. Although if you look at the results, the bank's results for Q2, they clawed back some of the impairment losses that they have passed through in 2020. So they're also trying to pass a message that the worst of the pandemic is over for their customers, which is not exactly the truth. But also, I think if you look at the trajectory of the next year, it's not looking good because next year, Kenya is going through an election period. We have an election in August 2022, and the campaigning has begun. So we've already seen from 2020, we already saw slowdown in private sector credit. Private sector credit as a Q2, we were looking at a growth of 7 to 8% on an annual basis, which is still very, very weak. So in terms of balance sheet growth, I think we are expecting, I'm expecting a single-digit growth rate to continue for the next 3 years. And banks are still likely to continue buying more government securities, which now, as a Q2, was about 30% of the assets bought in government securities. I think that will move to probably 35% by next year. If you look at the liquidity ratio of the banking sector, it's so high. I'm projecting the overall liquidity ratio to be at 60% by the close of the year, which is very, very high. It just shows you banks have nowhere to park their liquidity.
All right, thank you very much, Mr. Bodo, for your time with us on the program. We do appreciate it. Enjoy the rest of the day. And a group of African finance ministers have praised the International Monetary Fund Managing Director Kristalina Georgieva's leadership after she was accused of improperly pressuring subordinates while at the World Bank to adjust the ranking in China's favor. Ministers from 16 countries, including Nigeria, Egypt, and Ethiopia, described Georgieva as a true partner to African nations seeking to mobilize funding to tackle the fallout from the coronavirus pandemic. The signatories are represented by executive directors who wield less than 10% of the fund's voting power. The ministers said in a statement that the allegations made by a law firm in a probe last month are serious and should be investigated. However, they also believe this should be done in a manner that doesn't undermine the integrity of the IMF and, most of all, must allow for a fair and just process. Under Georgieva's leadership, the IMF allocated about $30 billion in reserve assets known as special drawing rights to African economies and urged wealthy states to direct some of their allocation to countries lacking the means to cope with the COVID-19 crisis. Sub-Saharan African countries in 2020 received 13 times the annual average lending from the IMF. And South Africa's biggest metal workers union has launched an indefinite strike to press for wage rises in the engineering sector, action that threatens to spill over and block supplies of parts to make new cars. With around 155,000 members organized in the sector, the National Union of Metal Workers of South Africa has called for a total shutdown of the engineering industry, after which talks with employer bodies deadlocked. The union organized marches and rallies across the country on Tuesday, with thousands attending a march in downtown Johannesburg. And Rwanda Air and Qatar Airways have signed a comprehensive code-share agreement to offer travelers more choices, enhanced services, and greater connectivity to more than 65 destinations across Africa and the rest of the world. As part of the deal, the Rwandan flag carrier will also launch new non-stop flights between their Kigali hub and Doha in December. The agreement benefits travelers from across the globe who fly with both airlines, which expands each carrier's route network. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.